Hey guys, Akil here. Welcome back to another video. Today I want to talk about two things. One, I want to share with you the top 3 trading ideas that are on my radar for the week to come. And 2, I want to have a conversation about the 3 things you should know before ever entering a trade. Entries, stops, and more specifically targets, and the 2 type of target taking techniques that you can use. 2 types of target taking techniques. Wow, can't believe I got through that on the first run through. And the idea came from a message I got on Instagram this week. I'm not going to read you the whole conversation because it's going to get long and boring, but it started off saying this: Hey Akil, love the live streams you've been doing. Was wondering if I can get your thoughts on Upstart, UPST, Upstart Holdings. I was actually interested in that as well. I bought some shares yesterday at 109 on Tuesday. Price went up big. They had earnings come out. Price went up big, but today it's down along with the rest of the markets. I'm fairly new to trading and I'm not sure if price will continue to break through the previous level of resistance at 160. If you could let me know your thoughts on that, I would much appreciate it, but I understand if you can't. And we got into some dialogue, some back and forth, and to sum things up, we spoke about the importance of knowing these 3 things before you ever enter a trade, right? Entries, stops, and target. Your entries is going to be either what price point or what specific signal on the chart you're waiting for in order to get involved in a trade. Your stops are obviously your kind of your fail safe, right? Your stop loss is the place that if price goes to that level, you're getting out your trade, so your protective stop level. And then your targets are where you think price is likely to go. Now, in our conversation, I did ask the trader, or I did ask the person, are you a trader or an investor? Because depending on which of the 2 you are, you may have different techniques. My investment technique as far as entry, stops, and targets is a lot different than my trading technique, right? As an investor, typically I'm buy and hold, buy, hold, and reload, I should say, on the dips. As a trader, I'm more of a mercenary, so I'm in and out in a matter of hours, a matter of days. And this specific person said that he was a trader. So we got into this conversation about, hey, he did have a stop loss, which was great, but he didn't have a target. And we spoke about, well, if you don't have a target, one, how do you know when you're getting out the trade or where you're getting out the trade? 2, how do you know your risk profile, right? And your risk profile is basically your risk versus reward, right? When you enter a trade and you have your, let's say you're buying, your entry is here, your target is here, your stop loss is here. So it's basically how much am I willing to lose is your stop versus how much am I willing to make if I'm right, which is your target. And you want to make sure that is in a specific ratio. Now, what that ratio is doesn't really matter. You can have an average of 2 to 1, 1 to 1. You can have a negative risk reward. That depends on you, your trading style, and ultimately your win percentage. I've shared with you a few videos ago this little graph, right? We did a whole thing on money management, but you can look at this graph in front of you right now. It can kind of show you the ratio between what your win percentage needs to be based on your risk profile, or what your risk profile should be based on your win percentage, which is pretty cool. But the point is, if you don't have all 3 things, if you don't have stops and targets specifically, how do you know what that risk profile is? And if you don't know what that risk profile is, that's half of the formula which goes into calculating your expectancy, which is the thing that if you consistently do this, you should consistently make that. So it's very, very, very important. And I want to talk about 2 main ways of picking targets, because many of you guys probably have that question. Well, Keel, how do I pick targets? And we're not going to get too specific into it because this is going to turn into an hour-long video. But there are 2 ways you can look at target taking, right? For a trader. So you're not a buy and hold investor or anything like that. There is going to be a static way, which means kind of the same way, and there's going to be a dynamic way, ways that have a little bit more flexibility. Now, the static way, just to throw some examples out there, it's going to be something really strictly rules-based. So like, for example, my target is always 2 ATR, right? 2 average true range units away from my entry. So you have your entry, you have your ATR, it's whatever number it is, multiply that by 2, that's always where your targets go. Or my targets always go at a 1-to-1 risk reward profile from my risk, or a 2-to-1, right? So whatever my risk is, my targets are 2 times that. I don't necessarily like that at all. I think that's a bad idea for many, many reasons. but I'll leave my opinion out of it for this video purposes. And there could be other static ways as well. So like maybe it's a moving average, right? If a moving average crosses, or if your relative strength index, your RSI, if it goes over a certain level, or if there's another indicator that you're using that gives you a signal. Basically, the point is that static target level is something that is the same way every single time. Think about like a mechanical system where every single time targets are taken the same exact way. A dynamic one is one where you give yourself the flexibility to make those decisions. So you'll often hear me refer to this as think like the other trader if you're familiar with my videos, where essentially you're doing analysis and you're making another prediction of where price is likely to go if you're right, and then for stops, where price is likely to go if you're wrong. So you're looking at the setup in front of you, you're doing analysis. Your analysis can be based on whatever you want. It can be based on fibs, it can be based on structure, volume, moving averages. Again, that's going to be dynamic for you as a trader, but you're performing analysis and you're making another prediction that says if price is likely to go up, sorry about that, very unprofessional of me. If price is likely to go up, then we're likely to go to this level, and that's the level I want to have my targets or want to take targets at. And of course, there's active trade management and trailing and leaving kind of an open position. That's something we talked about in the live rooms this week. That's something else we can add on that's a little bit more advanced, so I don't want to talk about it in the YouTube video. But if you're someone that is new and trying to figure out, well, how do I, I'm Akil, I'm good at identifying the trade, I'm good at getting into the trade, now I don't know how to get out. These are two helpful ways. And, I remember reading a study years ago that said, most traders actually aren't wrong in their prediction. They're wrong in some of the other aspects, and many of those aspects are trading psychology, right? We had a really good conversation in the coffee break this weekend with Jason Gracedown about over trading and under trading and how emotions are at the center of that. But another problem that stops traders from being successful is they just don't know where to get out, right? Their targets are too close, meaning they're not getting enough out of their move to cover their losses. They're leaving a lot of meat on the bone, or their targets are too far away, right? They're shooting too high that price actually follows through with their prediction. It just doesn't go to the point where it can make them profit. So you're stuck with that weird type of situation where like, yay, I made the right call, but I didn't make profit from it. And you feel kind of both ways. So cool topic right there. If you have any questions or comments on that, leave it in the comment section below. You guys know that I read each and every one of them. I do respond. Many of these comments do become either episodes of the Trading Coach podcast, or you can see like messages like this become episodes of the Weekend Trading Edge. So leave it below. We're going to hop into the video. Before we do, speaking of risk reward, I'd like to have a 1-to-1 ratio between the amount of traders that watch this video and the amount of likes I have underneath. So please do me a favor. This is a free video. I take time out of my weekend and time with my kids to do this for you. The least you can do is hit that like button and just show your approval. It makes me feel good, keeps me motivated to come in each and every week and provide this for you. All right, let's hop into the charts. We're going to get started here with trading idea number 3. I'm going to be on the Euro Yen daily. We're going to work our way down 3, 2, 1, or I guess work our way up. Number 1 being my favorite idea for the week. But if you remember a few weeks ago, we talked about this on the daily. We had a Gartley pattern here in the Euro Yen. X to A to B, right in here, B to C. C to D. You see it completed perfectly, stopped on a dime, essentially, spiked a little bit past it, but didn't really play around with the highs at all, and worked its way down, achieving target 1 and getting close to target 2. The area that I want to isolate on and focus on today is this area right here in anticipation that will come down to the target 2 level. Now, you can see my VS1 levels. These are the green and red boxes on your screen. These represent visual levels of structure. I know I bounce around between NinjaTrader and TradingView each week, so sometimes you see them, sometimes you don't. But these are essentially little helpers on my chart that tell me, hey, Akil, you should pay attention to these swing points. These are important levels of structure. But it doesn't necessarily mean that you have to enter trades at those zones or take trades off at those zones. It all depends on your particular style. And what I'll be looking for here, if we get a certain movement, is a move down to not necessarily the lows of these zones, but the area right before. You see, I love paying attention to these big candles. I call them elephant candles. If you guys are familiar with supply and demand, you know exactly what I'm talking about. The consolidative periods before those candles are very important to me, and that's where I typically expect price action to go if I have one on my chart. So if we go down to the 4-hour time frame, which is the next one down, you're going to see that we're at another VS1 level. So this is a previous level of support. So this is a trade that's a little bit early on. The next one I'll tell you is kind of hopefully what this one ends up looking like. But if we get a violation of this previous level of structure support here at $1.30, get this off of here, got the sticky mouse today. If we get a violation of this previous level of structure support at $1.30, my anticipation is that we're going to travel down to about 129.59, so about 50 pips of profit. Now, again, not a lot of meat on the bone here, but it all depends on how it works out and what type of trader you are. If you're a breakout trader and you're putting a sell stop right down here and looking for the break, it's going to be limited room, and you hope that you get a pretty mediocre breakout instead of a strong break that rallies down to your targets. If you're a pullback trader, then again, you never know what the opportunity is, right? We can break and close below, giving us our signal of the violation of structure. We can put in another pullback up here, then all of a sudden we've got 100 pips of range from 130.50s to 129.50s. So lots of opportunities here. If you're looking for a lower level to go to, again, this is my personal level. Doesn't have to be yours. We can do some other things too, right? We can take a Fibonacci extension from our swing high to swing low and back up. You can see there's a 127 right down here, 129.18s. We can take an AB equals CD pattern. Looks like that'll probably put us in that structure level below. Yep, a little bit lower there, or underneath 129s. So different ways you can do it. Again, we spoke about different ways we can take targets, whatever fits your fancy. One other thing you could look at, this isn't one for me, but let me see while we're here. This may be an advanced pattern formation. If you're looking at this as an X to A and A to B, nope, not going to hit the 618. But I was going to say, if we had an advanced pattern formation there as well, maybe you can take the completion of the potential Gartley as an exit point as well, but we're a little shy on the C leg. By the way, this brings up another point. Didn't mean to get onto this type of rant, but I've been getting some questions all week from a trader who's been asking about validation points for patterns. It's he's like, hey, if price touched this, does this mean the pattern's valid for B or not? And the advice that I gave him, right, first, you need to know your rules for patterns, right? You need to know what you're looking for each specific pattern and each specific Fibonacci requirement. But my advice is don't look for patterns in hindsight, or don't draw them in hindsight. So don't start with the D completion and work your way back to make the X quote unquote fit. Work into order, right? So what's the first thing that we need to have done in a pattern formation? We need to have an X to A. So draw your X to A. The next thing we need to do is have a B leg, and you have specific requirements for that B leg needs to hit. So go to step 2. Okay, if we get valid X to A, then look for B leg. B leg needs to hit blankety blankety blank, depending on what pattern you're looking for, and you don't move on to step 3, right? You don't move on to measuring the C leg until you get that B. And if you work in order that way, it's going to eliminate a lot of the confusion about, is this B valid or is this B not valid? It's going to be black or white, yes or no. If it is, you move on to the next step. If it's not, then you just erase everything because the pattern is not going to be valid. So that's my advice for anyone that is new to patterns. But first and foremost, it starts with knowing the rules. I have a feeling this trader didn't know the rules, because if you did know the rules, there should never be any question about what ratios need to be hit for what specific patterns. Let's go to trade number 2. So trade number 2, I guess I had to switch some things around because I made a mistake, and I had something that was valid that I double checked and wasn't valid, so I had to delete it from the video. But I think this is going to be trade number 2. It's going to be on Ripple. And this is an interesting situation. Again, now, I'm not a crypto person at all, but I do analysis on crypto from time to time because I work with crypto traders. And from a technical perspective, right, technicals are the technicals if you're going to be using technical analysis. If you're a fundamental trader, then obviously fundamentals want to come first, right, and your technicals want to come second. But we have an interesting setup here, and I'm actually anticipating a move lower, and I'll show you why. And if we go here on the 4-hour, right, and we just kind of read the story that price action has given us, we've got a few important things that have happened. One, we've broken and closed above this level of structure, which is important. Now, we've held at the next level of structure, but this is important. But what happens after this violation isn't too kind of, wouldn't get me too excited about a continued bull move, right? Because we do everything normal here, right? We break and close above, really sharp intentional break. We come back to retest, right? Now, after this move, right, I would expect a continuation higher if this is going to be a continued trend. The thing is, we come back and we double top. We retest structure and we do not violate. We get a little bit of relief and then we come back up to test again. We hold structure and we do not violate. We get a little move down. We come back one more time. We hold structure. We do not violate. And then we push down and violate these previous structure lows. Now, we come back up to test, kind of like a 26.18. And from this move, I would expect a continuation lower. We get a shorter retracement. And then we get a retest of the highs here, hang out there for a little bit, but we refuse to break these highs before, once again, coming back down, taking out the previous lows, holding at these lows, and then most recently kind of dribbling in the lower range of this channel, right? So these are clues to me that I'm more likely to expect a move to the downside versus the upside. Now, again, we always want to be predictive in our analysis, reactive in our execution. So just like the previous trade I showed you on Euro Yen and the next trade that I'll show you on Euro Swiss, which again, the Euro Swiss was my trade number 2. Now it's my trade number 1. So I don't know, it'll make sense at some point. What we want to see is a violation of this level, the true clue of a continuation down. And I would anticipate a continuation down to this area right here would be a violation of this level. Now, doesn't mean you have to wait for a violation of that level. No, not necessarily, right? If you are a conservative trader and you want kind of all the clues, all the evidence lining up in your direction, then yes, you're going to need to wait for a violation of that level. However, if you're more aggressive and you like to position yourself, let's say before the break, if you find a reason for entry, we had a lower low, lower close right here, you can position yourself in this kind of range right here and be in the market prior to your anticipated breakout. So that's a reason to get involved as well. So an interesting opportunity here. This was kind of a replacement for another one that I took out, but got to show the crypto traders some love too. We do venture into those lands every once in a while, and always cool to show you guys that technical analysis is the same there as it is in the stock market, as it is in the currency market. Obviously, they're a little bit different personalities, right? Different markets have different personalities, but the core fundamental principles are going to be the same across the board. Now, before we get into the next trading idea, I want to remind you guys to hit that subscribe button. There are new videos posted on this YouTube page 6 times a week. We got the Trading Coach podcast that comes out, obviously of the Weekend Trading Edge, but I also do live streams every Tuesday, Wednesday, and Thursday. And the live streams are cool because it is a live look inside my New York live trading room. So unlike videos like this where you just hear me talk and you can leave comments below, you get to interact live with me and a handful of traders in our community. We've gotten wonderful questions. We've done some wonderful analysis. Everyone that's joined so far on the live stream, they've loved the experience. So I recommend checking it out. Again, every Tuesday, Wednesday, and Thursday, we go live, 7:30 a.m. New York time. Check it out. Join the conversation, come get some free trading knowledge. Hit that subscribe button and that notification bell. That way you don't miss the alert of when we're about to go live. All right, let's dig into the trade idea. Trade number 2, we're going to go to the Euro Swiss. And you can see this is going to be pretty similar. The difference is that instead of waiting for a break of this structure level, I'm here on a daily, by the way, instead of waiting for a break of this structure level, we have already violated, and we violated with a pretty good bearish candle, right? If you guys remember the video we did on daily candlestick predictions, you look at this candle right here, it's got 3 very good signs on it. One is the lower low, lower close, right? The break and close below previous level of structure, which automatically tells us that we should anticipate a move lower. 2 is that it's a very strong bearish candle. The close of the candle, if I zoom in, right, is very close to the bottom, meaning that the close of the session, the close of the day, was close to the extremes of the day. And then 3, we have that long tail, that long leg, that long wick to the upside. That tells us rejection, right? That tells us that at some point in this session, right, the buyers tried to push it up and they failed. They got blasted out of the water, right? So a very good candle here to anticipate a continuation downward. And just like the previous opportunity, right? Got a big old elephant candle right here standing out, looking for the consolidation period before there. So going down to the 4-hour, again, you can see the difference here. This is essentially, excuse me, the same setup as euro yen, just a little bit more advanced, which is why I like it more. If you're a breakout trader, right, you had your breakout already on, at 104.28, that could be an entry for you, right? If you're looking for a pullback, obviously wait for a pullback into previous structure, which should now act as resistance and a chance to get it lower, right? Targets can be looked at as the same ways we did with the euro yen. Again, this is the area I'm looking for. You can easily look for the lower VS1 level as well, but you can do a few things here, right? You can take Fibonacci extension, swing high to swing low, and back up. You can see our 127 is right there, right below basically the 104 even handle. By the way, didn't mention this, beautiful. How about this 2618 trade, right? Beautiful double top, break below, come right back up to a 618. Beautiful 2618 trade for you guys that are 2618 traders. But we can look at it, equal measure move as well, AB equals CD. So copy this move down, drag it down there. You're going to see that AB equals CD lines up right at that zone as well. So that's a good example of kind of like a thinking like the other trader, doing analysis to find your target location. I talked about earlier, another way would be like a static way. Let's just say that you're someone that wants to use an ATR target, right? So let's say this is your entry candle right here, the breakout candle, just to give an example. The ATR of this candle is, let me bring up my data box real quick. You guys can't see it, but I'll bring it down here. Too many screens. Our ATR, you can see right there in the middle. I'm pointing to it with my finger, but that means nothing for video purposes. The ATR right there is 22. So let's say your target strategy said I use 2 times the ATR, right? So that's simple, right? Your ATR is 22. Multiply 22 times 2, that equals 44. So what you would do for a 2 ATR target is you take the low of this candle right here, right, which is 104.29, and you're gonna do 104.29 minus 44. So if I do quick math, it's gonna be 104. I'm not gonna try it. It's early Saturday morning for me. What is it? 104.29 minus 44. That should be 103.85. There we go. So your target would be 103.85, which happens to be right around that Fibonacci extension and that AB equals CD pattern. But that would be an example of using a fixed or static target selection, right? No matter what structure exists or no matter what Fibonacci's exist or AB equals CDs exist, your target is always 2 times ATR from entry. So good example of 2 different targets. Again, good trading opportunity here on Euro Swiss. As always, I've got a conservative zone up here, but we got a lower VS1 level, a little bit lower as well. if you're looking to take target 2s or looking to be a little bit more aggressive. 2 more things I forgot to mention because I don't plan these or rehearse these, but another one where if you have an advanced pattern formation, this may be an advanced pattern for you as well. Again, it is not for me, but I understand different people see these things differently. But if you're looking at this as being an X to A, this is your A to B. You can see we come down. We already have Gartley on the radar. If you look at your X leg, we have a valid C leg this time, unlike with the Euro Yen. So if we push down to this level right here, this same mesh point right here, which is what, 103.89, that is going to be the completion point for a bullish Gartley. So if you're someone that's adding a CTS score up, not only do you have AB equals CD, not only do you have 127, but you've got a bullish Gartley as well. And if we wanted to add a potential bullish Gartley, if we wanted to add one more thing, we could bring our volume profile in from this swing, see where our heaviest levels of volume are at, swing low to swing high, and you'll see that, boom, this red line right here, right in the middle is our heaviest level of volume. So I think this level right here, 103.83, right? I think it's pretty obvious that is a key level that we should be aware of in the market with all that's happening there. Pretty cool stuff, right?